What up, Hyperchange? Welcome to another episode. Today we're talking about stock splits and particularly why I believe Tesla should do a 1-to-20 forward stock split. So first, we're going to do a quick overview on what stock splits are and then more about why Tesla should do one. So stock splits come in two different forms. There's forward stock splits and reverse stock splits. Let's do an example of a forward stock split. You own 10 shares of company A that has 1 million shares outstanding. They want to do a 1-for-2 forward stock split. So now for every one share you had, you now get 2. So now instead of there being 1 million shares in company A, there's 2 million shares, but the price per share of company A gets cut in half. So your ownership in the company doesn't change, just your number of shares that you own changes and the price per share changes. So now instead of say owning 10 shares at $10 a pop, then you would own 20 shares at $5 a pop. So your worth is still $100 worth of stock, but instead of owning, 10 shares, you now own 20. The price per share went from 10 to 5. So that's a forward stock split. Now, the opposite of that is a reverse stock split. So let's say company A did a 2-for-1 reverse stock split. In this case, company A's 1 million shares would go to 500,000 shares and your shares would go from 10 to 5, but the price per share would go from 10 to 20. So instead of holding 10 shares for $10 a pop, you'd have 5 shares for $20 a pop. So basically a reverse share split causes the share price to go up, and a forward stock split causes the price to go down. And so there's a bunch of different reasons for why companies do forward and reverse stock splits. The main reason companies do reverse stock splits is because their share price is crashing and probably the company's not doing too well. And so there's all these requirements to, like, let's say you want to stay on NASDAQ or New York Stock Exchange, your share price has to be, I believe, either above $1 or $5 per share. So if your share price is crashing to, let's say, $1 and you want to still maintain your NASDAQ listing, maybe you'll do a 1-for-10 reverse stock split. And so your share price will go from 1 to 10, but you only have 1/10 as many shares outstanding. So there's a ton of different reasons why companies do this, but the important thing to remember about stock splits is it doesn't change like the monetary value or percentage of the company that you actually own. Like your dollar position doesn't change from a stock split. And this is why a ton of people ask me on the channel, like, oh, what do you think about Tesla doing a stock split? And I basically have just said up until now, like, it just doesn't matter. I don't care if I own twice as many shares, but the share price gets cut in half because they do a forward stock split. Like it's the same to me. It doesn't matter. That was my thought until now. But one of my mentors emailed me and was floated this idea of a Tesla share price stock split. And I actually think it's a really, really smart idea for Tesla in particular to do a forward stock split, because Tesla's share price right now is about $360 per share as I make this episode. So if you're a new investor, buying one share, the minimum that you can buy of Tesla is $360. Maybe if you're watching the channel, you're like, oh, that doesn't matter, whatever, like I have that much laying around. But why it does matter, and why in particularly Tesla's case I think it's so important, is because like if you're young and you're a kid and you're just getting started in investing, it's super hard. It's probably impossible to afford $360 per share. Like that's a ton of money. And let's say you have $100 you want to put into the stock market. Maybe you don't want to put it all into one company, and you can't even put just $100 into Tesla. So I think Tesla in particular, I was just recently at this high school talking to kids about investing. Shout out to Mr.G's class. They were all super excited and inspired about investing, and like they don't have a lot of savings, but now there's all these new apps and services like Robinhood that make stock trading free. And so they could easily put $20-$30 into a Robinhood account, but the problem is Tesla stock is still trading for $360. So this is why I'm proposing that Tesla should do a 1-for-20 or maybe even 1-for-30 stock split. So in that scenario, let's play that out. If Tesla does a 1-for-30 stock split, the stock's at $360 a share. Now all of a sudden, for every share you own, you get 30 shares, and the share price goes from $360 to $12. So your dollar value of how much shares we own won't change, but we'll all have 30 times more shares, and the share price will drop from $360 to $12. And this I think could be huge for Tesla. From it's not going to change anything dramatically or right away, but I just think this makes it so much more accessible for young people and kids to just be able to put in $12 in their Robinhood account and buy a piece of Tesla. Like, how much more likely are you to follow Tesla's story, to become a customer, to get excited to go into the stores, to talk to your friends about it, if you could call yourself an investor? I mean, this means kids could go to the shareholder meeting, which is something that you only get if you're an investor. They could have a say on retail investors asking questions on the conference calls. Like, I don't know, at least personally for me, being a shareholder of a company makes me feel 10 times more involved, a part of the story, a part of the mission, because you really are. You're an owner of that company. And I think that's a super, super powerful concept concept. And if you're a company like Tesla who is building a movement really of people who want to think green and sustainable about the future, getting the most young people involved in that movement is super important to the brand and the future of the company. And I think even though these small investors who are only going to buy one share of Tesla for $12 today, maybe in 10 years, those are the same smart kids who are able to buy Teslas in the future, and they're going to keep putting their savings into Tesla stock. So not only are they a part of the movement, but I think it makes it a lot more accessible to start educating yourself about the stock market if you can put in $12 a share and buy your favorite company. And so that's my pitch to Tesla and Elon Musk is, do a stock split, because I think Tesla in particular is a company that resonates so powerfully with the youth and kids and people who are thinking about the future and are forward thinking, and allowing those kids to be able to buy and own one share of Tesla, I think would be huge for the brand and just super exciting and a way to expand the community. I've gotten a ton of emails from like young teenagers who saved up a ton of money, like all the money they could, to buy one share of Tesla, and like they're so stoked about it, and it makes them feel like a part of the company. They're educating themselves about finance, about corporations, entrepreneurship, business models, but how many more kids could that be if instead of having to save up $360, they could do it for 12? And so that's why for Tesla in particular, where they're a consumer facing company, they're a movement, I actually think a share stock split really could make a huge difference and get a lot of young people involved. So that's my pitch to Tesla and Elon Musk, is do a 1 for 20 or 1 for 30 forward stock split and make it more accessible for young people and tinier investors and the little guy to be able to be a part of this exciting movement. So I hope that teaches you about what stock splits are and why Tesla should do one. If you agree with me or don't agree with me, leave it in the comments below. Anyway, this is Hyperchange. Huge shout out to our Patreon supporters, producers. Make sure to sign up or check out our Patreon page, link in the description. Anyway, see you guys next time. Peace.